Hi everyone, hope you're all doing well, and today we talk about Lemonade stock and if it's a good time to go buy Lemonade. It's one of the most talked about stocks at the moment, probably just behind Apple and Tesla. I think they're taking the headlines, but Lemonade is kind of catching up to them. But yeah, this is a stock that you guys requested me to do, to talk about with Lemonade, my opinion on Lemonade right now. A big disruptor coming into the insurance market, so I'll give you my thoughts on this one, guys. And let me know what stock you want me to do next. You know, this is kind of the episode where I ask you guys what do you want to see on the channel. You've gone for, Workhorse before and other stocks like that. So yeah, comment down below. Let me know what stock you want me to do next. I'll try do it next week for you guys. Whichever stock gets the most thumbs up, the most likes, is the stock that I will do. So if the stock you want me to do is already posted, don't post it again, guys. Make sure it's there and like that comment, okay? So we don't get, 15 on the same stock in the comment section. But yeah, we'll take a look into Lemonade stock and I'll kind of give my thoughts on it. So Lemonade is a recent IPO. The excitement is that it's a disruptor in the insurance industry. And when we talk about stocks or companies, I like to just kind of focus on the industry to start with. Like, what do we think of the industry? So insurance, it's a massive industry. Everyone needs insurance. In fact, I'm sure you have multiple insurance. You need it pretty much for everything nowadays. And it's one of those kind of industries that, like I say, it's a massive market. It's one of those that hasn't developed much. Like when you think about insurance over like the last kind of 10, 20, 30 years, insurance companies have kind of always been the same. And really the only change that has happened is that we've kind of got a few more like compare insurances websites that have come out here, which are kind of decent investments. I think in the UK, I think it's Money Supermarket that's the one that's actually on the stock market. And that was the only change, the ability to compare like other insurers to each other and find the cheapest quote rather than doing all the sites individually. That was kind of like the big massive change that we did have, but Lemonade is one of those that want to change it again going forward. Now, just on the comparing side, like that's a pretty good disruptor. Like when you think about it, instead of individually going to every insurance company, being able to compare them all on one site. I've got to say though, I always get frustrated because like the company that you're with, like they send you a quote through, don't they? And then you go on the compare sites and it's always cheaper, and it's like, why are you trying to do that? Just send the cheapest one through. But yeah, Lemonade itself is one of those that is kind of wanting to disrupt this complete sector once again, and it's been around for quite a bit now. And I would say that when you look at what Lemonade have done previously, it looks like it's doing quite well. You look at the revenue side of it, the revenue's growing quite well. The amount of customers they're getting are doing quite a good job as well. They're also keeping a lot of these customers. Like I don't know what the renewal rate for keeping customers were in 2019, but in 2018 it was like 98%, which is fantastic. The worst thing you want to be doing is getting all these new customers, but then you're losing your existing customers. I once worked for a company that used to celebrate when they got one big massive client, but they always used to lose one big massive client every year. So the company never increased in revenue because it was always gaining one and losing one, which is a position you never want to be in. But when we look into how Lemonade are doing, they're actually keeping a lot of customers as well. And also the customer satisfaction on this company is really good as well, which is fantastic. And that kind of, when you look at what the renewal number is, kind of suggests that they are quite good at keeping the people that they do have currently using their insurances. So Lemonade pretty much is focusing on AI to handle a lot of its, a lot of the policies, getting the policies for you, making it quicker to get policies. And also when you come to, if anything happens and you get paid out, making the process of getting your claim a lot quicker as well, which is the kind of attraction. You don't want a lot of these insurance companies, they kind of want to make it hard for you to get your money. Lemonade want to use AI, make it nice and quick, get you, if something happens, get it paid out to you, and also getting quotes as well, trying to limit the amount of detail that's there. And also when you look at what they're doing with where they are in countries, obviously they're in America right now, they're expanding worldwide and looking to tap pretty much into every country they can do. So it's expanding quite well as well. So just running through the website, you can see it's quite a nice clean website really, nothing too much in your face. And when we go on to the claim section, you can see that it promotes its AI, how quickly it can do things. It has the world record for handling a claim and paying it out, which is 3 seconds, which is pretty good. Can you imagine that? And I think the way that it handles claims is that you actually talk into your camera and then the AI actually checks it. and then decides where it's going to pay out, which is kind of cool. Like, I kind of want to get like a Lemonade insurance and like have some sort of claim and then actually try use this feature to see what it's like. But one of the big features it has here is what we call the Giveback, which is where what Lemonade try and do is when you actually pay for like a policy, if all the money that's like not claimed and paid out, basically 40% of that, or a maximum of 40%, actually goes to a charity, and you get to choose when you make the policy which charity you want it to go to. So that kind of appeals to people, like, you know, it's a company that's also benefiting like the world and you know, charities and giving money out there. So it's kind of, you know, trying to build up a lot of relations, and I think for like a lot of millennials that will kind of appeal, you know, using insurance that also gives away to charity. I've got to say, this company, we'll get onto the financials in a little bit, but the company doesn't actually make money at the moment. And I thought, it's good giving away to charity, but just be careful, you know. When you're a company not making money, you know, the last thing you want to be doing is like having to raise cash because you're not making enough money, and then having to give money back away. You know, I like what they're kind of doing here, and I can see it being a good selling point. I'd just be wary about them not giving too much money away. And when you actually look into Lemonade, they do a lot of like house cover, if you're a rental cover, and they've actually just launched pet insurance now. And like I say, it's a big market, so there's a lot of other insurances where Lemonade could go to. You know, you could imagine like, you know, travel insurances, car insurances. So there's a lot more insurance for them to expand into. So yeah, they've only just really started. You look at what the user growth is, good user growth, and if you can carry on doing it like here and try to get to profitability, which it should do really, because it's, you know, using AI, it's not having to employ more workers. You should see the company doing actually quite well. So when we take a look at the stock, it's currently trading about $58. Ticker symbol is LMND. And like I say, it's a recent IPO. It's only been on the stock market for about 2 months now. IPO'd around about $70 where it closed on its first day of trading. Had a bit of a jump up to 85, and since then it's kind of been dipping down. And it's dropped a little bit since its IPO. It's down about 15%. And I always say this about IPOs, you know, I always don't like buying straight away, just because what happens is, you know, all these people that invested into the company like really early on, is they can't sell the shares in the stock exchange. You know, as soon as it come public, people inside can't sell, because otherwise you'd have, you know, more than likely a lot of the IPOs going down in value straight away on IPOs. So a lot of these insiders have to wait a couple of months. I think it's 180 days, and then eventually they can sell. But you think about all these investors that have probably been in the company, it was founded in 2015. You think about, you know, how many people have been in this company, and, you know, the ability to now sell instantly the shares that have been tied in this company for 5 years. Obviously there's going to be a few people that sells, and that's why you normally see the IPO for the first kind of like 9 months on the stock market is kind of a bit of a stagnant one, or it doesn't really move that much, or it moves down if anything. So that's why I always kind of like wait on IPOs just to see what kind of happens, and it looks like the same's kind of happening right now with this one. So when we take a look at the financials, it's a company that's ramping up its revenue really good. You know, a company that's only been around 5 years and looks like it's going to be posting probably 100 million revenue this year. Is pretty good going. The only problem that it is having at the moment is that its revenue has ramped up, but at the same time the earnings are getting, you know, they're losing more and more money, which is kind of worrying. And it looks like it's forecast at the moment to still carry on increase that revenue at a really healthy rate. You know, when we look at insurance companies, they're typically companies that kind of have flat revenue increases, but this company is, you know, not doing that. The revenue is ramping up really quickly on the forecast, growing at massive percentages. You know, you look at 2021 to 2022, the revenue is nearly expected to increase 70%, which is fantastic. Once again though, the only problem is that the revenue is ramping up and the earnings are dropping. And, you know, even though there's like some leeway on companies where, you know, you can say that, yeah, it's going to lose money, but it's making the right way forward to profitability. This company at the moment, the more revenue it does, it's going worse on the earnings front, which is kind of a bit of a red flag for me. You know, when I invest into companies, I don't mind buying companies that are unprofitable, but they have to have some vision of getting there to profit. Otherwise, you just keep, losing money. Keep losing money. What happens is it starts biting or going through the balance sheet, and then they have to raise more cash. Shares get diluted, and the stock goes down. And at the moment, it is looking like it's going to be, losing 100 million every kind of year at the moment, which isn't great. So it looks good on the revenue front. The earnings is just one of the problems at the moment. Look on the balance sheet though, and what you'd kind of expect for a tech company, especially an AI company, is you expect a good balance sheet. No debt at the moment, 288 million in cash. So just running through the numbers there, if they're losing about 100 million a year, 288 million there, it looks like they're probably going to burn through the cash, probably have to raise more cash, which is kind of a bit worrying. So the cash pile could be a little bit more than what it is right now, but like I say, it's a bit off profitability, and at the moment it will burn through that cash on the balance sheet, which is kind of a bit of a red flag at the moment. So overall, what's my opinion with Lemonade? Well, I kind of like what's going on here. I like where it's looking at. I like how it's going to try and disrupt this kind of sector, and having instant payouts, easy to get your quotes for your insurance, and also them quotes actually being quite a bit cheaper as well. You've just got to be really careful and watch their margins, especially when you're not a profitable business like Lemonade is right now. So I like where the vision of this company is, but for me, like I said, I love the revenue growth. It just has to get better at that profitability front. Like at the moment, it looks like it's going to lose money, and it's going to keep on losing money as the revenue goes up. For me, I have to see that the company move to a profitability range, and even if it's only 2 years of profitability, just moving in the right direction where it is going to make profit. And then I could see this one being quite investable and the idea behind it. But the moment you're losing quite a bit of money, quite a lot of money that will start affecting your balance sheet, especially when you look at what they're going to lose, what money's on the balance sheet, they're going to have to probably raise more money. So for me, I like it. I like where the vision of the company is. It just has to get closer to making profit. Once this company starts turning the corner and makes profit, and when you consider as well the IPO, and I don't normally buy IPOs for like a good 9 months after them, it ties in quite nicely to just look at what the company does over the next year. If it does start moving in the right way, and I think this company could be a chance to buy into it. It has a good game plan. It just needs to execute it a little bit better and get that profitability up there, and it could be a buy. So it's one that's going to go on my stock watch list. It's one that I'm going to keep an eye on. I'll see how they do over the next kind of 12 months, maybe 24 months. And if things start changing on the company on that profit side, I could see myself buying it. But just right now, just losing a bit too much money for my liking. And like I say, when you look at the cash on the balance sheet as well, could do a bit more cash to kind of manage how it's going to be unprofitable as well. But like I say, when the expansion into like other countries as well starts kicking in, the company should do okay. So not a buy right now, but I would put it on the watch list and reassess it again in kind of 12 months and see what happens with the company. So hope you enjoyed the video, guys, and remember, let me know what stock you want me to do next. Comment down in the comment section. Make sure you give the stock you want me to do a thumbs up, a like, and if you're new around here, make sure you subscribe, like the video as always, guys, and I'll see you in the next video.